All right, we are live. So welcome back to Dapp University. So today we got a lot to talk about in our live stream, okay? I'm going to talk about a big development for Web 3.0 that is flying under the radar that not a lot of people are talking about and want you to understand about this, okay? We're going to look at that. We're going to look at a lot of the news updates that have happened in this space since yesterday. Again, we do these live streams Monday through Friday. Just subscribe, turn on notifications. You're going to find out about those whenever we go live. We're going to check on the crypto markets, answer some of your questions from the replay here, from the live chat, and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp. You start today. So we got people jumping in the chat here. We've got Culturized, Technically, Rodrigo, Automatic Beats, Dirk, let's see here, Gus, Robert, Darkos, Timur, Adam, THX like this. Welcome, welcome, welcome. All right, so let's go ahead and jump into this here. So we got some cool questions in the chat. Should I sign my 12-year-old up for Dapp University? If they like to code, definitely. All right, so let's jump into this. Let's talk about Web 3.0 developments flying under the radar. That's pretty important. And you'll see why here in a second. So last week, I talked about a big use case for Web 3.0 that is, untapped to a large degree, okay? And that's decentralized identities. If you caught the live stream Friday, you heard me talking about this, but I want to bring it back up because that's what the update today is that connects to that idea. So Web 3.0 has a huge opportunity for decentralized identity and creating a new way that we use the internet that's better than the internet that we use now, okay? So let me pull this up on my screen here, and we're going to talk about decentralized identity a little more and how this relates, but let me look at this update and show you why this is such a big deal. So it's a couple of days ago, I should bring it up today, we saw a blog update from Auth0, okay, a big authentication platform that now supports sign-in with Ethereum for multiple websites, okay? So let me just pull this over here. So thanks to the hard work of Spruce following their announcement on March 8th, you can now add sign-in with Ethereum to your Auth0 tenant via marketplace integration. So what is this and why is it important, okay? So I don't know if you've ever been to a website where you've seen the option to log in with Facebook, log in with your Google account. They're doing log in with Apple account. We're seeing all these things that are making it easier for users to sign up with a website without having to manually enter in their username and password, okay? It's basically called OAuth. And so this was a big Web 2.0 trend that took off, in the rise of social networks like Facebook. Like a Facebook login button was a really popular feature to start adding onto websites because it was a win-win. It was like a reduced friction for the user that had to create an account. They just log in their Facebook account, and then it's a win for the application because they get to read all their Facebook data and know who their friends are, all this type of stuff. Whatever permissions you consent, the app would take that, okay? And so that's a common user experience that people have gotten used to now. And now we're looking at the option of logging in with Ethereum supported by Auth0. So I've talked about this idea a few times on my YouTube channel. I've made videos about this, about how, decentralized logins could be a huge use case for Web 3.0. That's not related to financial speculation. It's not related to, NFTs necessarily, but it's a really quick win where you can just have a MetaMask account. You don't even have to pay any gas fees. You don't even have to have any money. You can just sign a message that proves that you are you, and then you can just instantly log into a website. That's a better user experience, in my opinion. And then that identity can transfer with you throughout the web. Okay, the whole paradigm shift for Web 3.0 is that you're a user of the entire network, not just each individual application, and your username can just float with you and travel with you wherever you go. So speaking of identity, management for Web 3.0, this connects to that idea, which we talked about on Friday. So we'll recap that in a second. So, but why is this in particular a big deal? Well, it's a big deal because, Auth0 is basically a protocol that lots of people in the Web 2.0 world use already, all right? And so if you're basically using Auth0 off the shelf and you're able to, quickly add things like log in with Facebook, log in with Google, log in with XYZ, then you can just within a few clicks of a button, essentially, or a few configuration changes, I should say, add in, sign in with Ethereum support to your website. Okay. And so this is a critical bridge to getting to that Web 3.0 step of decentralized identity management that we talked about on Friday. And we're seeing more and more support roll out this by major authentication providers. Okay. So let's circle back to identity for Web 3.0, decentralized identity, and how that's such a big deal. So like on Friday, we talked about how it's kind of an underserved use case in Web 3.0 that I think has a lot of upside potential, especially something that doesn't necessarily have to, involve cryptocurrencies, doesn't necessarily have to involve financial speculation. Because at the end of the day, all you really need is someone to create an identity for you, and you don't have to continually be writing information to that identity, right? So you could basically create an identity with smart contracts, and maybe the initial cost is just setting that thing up, and then you own it. It's tied to an account that you can sign messages from, and now the identity can carry with you, from place to place. And maybe the only time that there's a cost required to write something new to that identity is whenever you make a critical change. And there could be plenty of cases where there's a financial incentive for somebody else to pay that cost rather than you, okay? So, we're talking about how zero-knowledge cryptography can really unlock the power of decentralized identity on Web 3.0, because at the end of the day, you could prove information about you without revealing that information. We talk more and more about how Web 3.0 has the potential to preserve privacy across the internet, okay, or decentralized identity does, under the umbrella of Web 3.0. So like the whole idea is you're going to a wine and spirits website. It wants to prove that you're 21 years or older, but it doesn't need to know your age, right? That's what a zero-knowledge proof can allow you to do. Prove that information is true without proving that, without revealing what the information is itself, or that you live in a certain country, like I'm a resident of blank, right? Just like using a VPN and, faking your IP address, right? So you could reveal that you're a resident of a specific set of countries, or that you don't live in a specific country, without revealing what the country is itself. There's so many different ways you can do this, okay? And when we see the bridge getting built from both directions, right, identity management solutions, over here, and then this kind of integrating in the bridge from the other direction of, third-party providers, auth providers like Auth0, supporting, log in with Ethereum, as long as that identity could be tied to that particular address, it's building the bridge from both directions and moving us forward to that, vision of Web 3.0. And here's the other point I'll make about this. You might say, hey, Auth0, that's all like Web 2.0 stuff. Like, why does that even matter? Well, the truth is this. My view of the Web 3.0 world is that we are expanding into Web 3.0, and then we're not just tearing down Web 2.0. This is a common misconception that I think a lot of people have. Okay, so basically, a lot of people think that Web 3.0 is basically just going to tear down Web 2.0, that we're going to stop using web servers, that we're going to stop doing blank, whatever it is, right? There will be some things that we value less and do less of, but I think it'd be very similar to like what the transition from Web 1.0 to Web 2.0, all right? It was an expansion, not a tearing down of the old thing. So in Web 1.0, when we went from static websites to rich web applications with mobile applications and stuff, right? We didn't just stop using static websites. We used them where it was appropriate, but then we had dynamic websites with interactive database backing where it was appropriate. When we had mobile applications come out, we didn't stop using websites. Like we have both. We have all these things now that can bring us a richer feature set, to the internet, right? I think a similar type of thing is going to happen with Web 3.0. I think we're going to have, the addition of crypto, blockchain, accounts, all that type of stuff where it makes sense. And we're going to have the legacy features of Web 2.0 where that also makes sense. Like, I don't think web servers are going away, even when we can put some things on a blockchain, even when we can put some things on IPFS. And so a very similar type of thing. One area where it makes sense to have these division of responsibilities, depending on the use case, is you could have decentralized identity management that models the user, right, on a blockchain with a wallet where they control more of that information. And then a lot of the features of a rich web application live on the web. They use a web server, they use a database, but these two things can become separated. And that's where you can build that bridge of having something like Auth0, where you have this, rich server process that still hands things off, stores stuff in a database, but the user's controlling part of their identity. So still, I think there's a huge upside to decentralized identity. Not a lot of people are going after this. I mean, there certainly are people who are doing it, okay? But still a big underserved Web 3.0 use case with a lot of potential, in my opinion, and this is a really cool development that was kind of flying under the radar that I want to tell you all about. So let me know what y'all think down in the comment section below. Let's see here. Somebody says, welcome to Mark Metaverse, where you own nothing but be happy and also pay 50% cut to Meta. Yeah, so let's pull that up. I saw this come out. I don't know if this is all true or not, but let's just take it at face value, okay? So Meta plans to take a nearly 50% cut on virtual assets sales in its metaverse. So I didn't really look into this ahead of time. I'm just literally reading the article as it's coming up here on screen. I saw it floating across social media. So let's just kind of unpack this together. So the 47.5 figure includes a hardware platform fee of 30% for sales made through the MetaQuest store, where it sells apps and games or virtual reality headsets. On top of that, Horizon Worlds will charge a 17.5% fee. So Meta's fees for the sale of virtual assets on Horizon Worlds are significantly more than 30% Apple charges on its App Store. So, yeah, this is definitely, I think, one thing a lot of people saw coming with the Facebook, Metaverse, okay? So let's just pull this up. So this is for a virtual reality platform, Horizon World, which is an integral part of the company's plan for creation, so-called Metaverse. Let's see. Yeah, so they're going to let Horizon World sellers create virtual assets. They're going to take a massive, massive cut. So yeah, it's hard to have not seen this one coming, right? People talk about sort of the metaverse world is diverging into two different areas, sort of like the decentralized approach. And then, we have Meta moving into this as a, more of a basically a corporation coming in to create something that's like a metaverse, and people say, hey, we don't want that version of metaverse, we want this one. At the end of the day, the users are going to decide what they want, right? What's actually going to take off, what's going to grow legs. But it's hard to have not seen this one coming, right? Of course, everybody wants to go in and colonize the metaverse to reap the upside rewards. But Facebook, it's hard to not seen that coming, where they want to basically control a lot of the stuff to get the fees off the sales. That's a pretty high fee. Let's see here. Somebody says they'll probably cut it down to 15-25%, to still make the marketplace with the highest fees, and everyone will think they're being honorable. Yeah, that's potentially an interesting point. That's the whole idea of like anchoring bias. It's a classic negotiation tactic. You come in, basically how do you make something seem less bad? Well, you start with something worse, right? It happens in the opposite direction. It's like, how do you sell a $5,000 watch? Well, you put it next to a $30,000 watch. It makes the $5,000 watch look cheaper in contrast. So you walk into a negotiation and you want a certain outcome, but you think that outcome sounds extreme. Well, you start off with a request that sounds 10 times as extreme, and then when you work it down, it's like the end result is not as bad. So that could be what happens with the fees. You see it in politics all the time. You see it, it's like everywhere. It says contrast principle. Yeah, contrast bias is definitely a part of it. It's also anchoring bias. You start off with an anchor, and that gives the other thing relative value. All right, so let's click on the crypto markets here. Definitely something people ask me about. Let's kind of check on what's happening here. Okay, so Bitcoin, we're back at above $40,000, getting pretty close to $41,000. Okay, we're still below pretty much all of our moving averages here. We're below the bull market support band. We're below the 50-day moving average. We're below the 200-day moving average here. You know, short term, things are still looking pretty choppy. Let's actually take a look at what happened here. Okay, so, you know, I think what a lot of people are watching out for now, of course, the desire is to try to basically reverse and retest the resistance that we've seen before, right? So we firmly have some resistance right here that we're hoping we can go back up and try again. So one sort of like optimistic view of this is like many times in the past when we see this important resistance to get past, it takes a couple times to try to get past it, okay? And then once you break past it, you still got to hold it as support before things look too confidently bullish, okay? So this could take some time. Let's just see here. In the short term, I mean, it looks like we're having a little bit of a bounce right here. Let's just see here. Yeah, we're seeing a little bit of a bounce around the $40,000 level. I mean, the fact that we're getting, I mean, it's not super significant that we're bouncing above this previous resistance. Or we'll see if that turns into another resistance level. Yeah, it's really hard to say. Let's take a see what's going on with the NASDAQ 100. That's one big area of correlation I've been watching with the crypto markets. Basically, what's going on primarily with tech. Okay, we're seeing some green on the charts there. I've always said that, you know, especially right now, I think a lot of what's happening with crypto is not a crypto-specific problem. It's definitely a larger problem that's affecting stocks. It's affecting everything, right? We've got crazy monetary policy, interest rate hikes, inflation going on, conflict in Europe, all this stuff, right? That's massive headwind for the stock markets, massive headwind for crypto. It's massive headwind for so many different financial assets. Okay, so the reason I'm bringing that up is we're seeing strong correlation still with stock market, particularly with tech. All right. And I don't think that we're just going to see crypto rip off to infinity until we start to see some confidence in all that. We get these little bursts of confidence, right? But we still need a reason to be just like full steam ahead. We're not quite there yet. Now, that being said, that's all short-term outlook. And at the end of the day, the best shot in crypto is not a short-term outlook. It's a long-term outlook. At least that's where my head's at. Anybody who ever asked me about getting into crypto, that's always my outlook. Because at the end of the day, if you're brand new watching the channel, my long-term thesis is that we're creating technology with real utility value, and that can generate demand for the technology itself outside of the price appreciation of the crypto assets. But as that demand increases, because cryptocurrencies are integrated into that stuff, and because those cryptocurrencies have sound economics, that by just sheer demand increase, that can accrue to the cryptocurrency prices themselves in a positive way over time. Short term, really hard to say. Long term, definitely. Will there be a token for, I think it's a spelling mistake, Arbitrum and Optimism on Binance? So on Binance, I don't know, to tell you the truth. Well, here's the thing. All right, there's a couple different layers to that question. So let's look at this. So basically, a lot of people say, like, are the layer 2 scaling solutions for Ethereum going to have cryptos? Like, are they going to drop tokens? Are you going to be able to get free money? So, and then this person's asking, will they be on Binance? Okay. So there's a lot of questions behind that question. So quick context, if you're brand new or you just don't know what a layer 2 is. So, Ethereum is its long-term answer to scaling is to, build Ethereum in multiple layers. Basically, we have layer 2s, which are independent networks that are piggyback on top of Ethereum, okay? Or you can do fast and cheap transactions now. All right, you have to wait for Ethereum 2.0 to ship. So some of those popular ones are like Optimism and Arbitrum, okay? ZK Sync and others. This person's asking about Arbitrum and Optimism in the chat. And lots of people are like, hey, are these networks going to have tokens? Are the layer 2s going to have tokens? So, I mean, a lot of, we don't have official announcements from a lot of these layer 2s, whether they're going to have tokens or not. But a lot of people are like, okay, how are we going to keep incentivizing people to run these networks long term if we don't end up having some, crypto native incentives, here? And so a lot of people are like, yeah, they're probably eventually going to have tokens. Now, not financial advice, no guarantees about any of that stuff. But if you think about the incentives here, high likelihood that some of these are going to have tokens. So let's just say for argumentation's sake that they do. All right, so this person's asking about Optimism. Again, I'm not like spreading any news that either one of them is going to drop a token. But let's just say for, example's sake that they're going to. The person was asking, is it going to drop on Binance Smart Chain? So, I mean, Arbitrum and Optimism are their own networks, okay? So if they were to drop a token, my thinking here is that it's going to be a native token for those particular chains, okay? Now, that being said, we've seen native tokens migrate to other blockchains where there is demand to do things on those blockchains, yield farm, trade tokens, all that type of stuff, using other DeFi strategies, okay? So, if one of these networks dropped a token, you could always see like an ERC20 version of this on a different EVM compatible network where they just like move tokens to a bridge and then issue ERC20 versions onto another network and then, do stuff with it. And then if you want to get back to the network, they just lock it into a bridge and then unlock their assets on the other side. So anything's possible, but they probably would not issue them natively onto that network itself. So it's kind of a long answer, but hopefully that breaks it down so that you can understand it. So why some extremist crypto folks against a CBDC? That's a good question. So a CBDC is a central bank digital currency. I think the biggest reason people are against it is because they view it as the anti-crypto. Okay, so a cryptocurrency, the big values of like OG cryptocurrency like Bitcoin is, decentralization, trust minimization, censorship resistance, all that stuff, right? And they view CBDCs or central bank digital currencies as the anti-crypto because it's the exact opposite. Like it's a centrally issued cryptocurrency. It's not decentralized by any stretch of the imagination. And, the whole idea is that all it does is give, like the benefit to the issuer is that it just gives full transparency into everything that you buy. and like with marginal benefit, if any, to the end user. So basically, they're seeing it as anti-crypto, completely centralized, and a complete invasion of privacy. And also just greater control over, your own money, in addition to privacy, or breach of privacy, I should say. Charles says he's here for the Lambo. Let me know how that works out. All right, so let's look at let's take a look here. a couple other things. So one thing that a lot of people were talking about over the past couple of days, that we didn't get to talk about in our live stream yesterday, even though I had it on my notes, was basically what happened with the Coinbase asset listings. So basically, let's see here. People were talking about basically, Coinbase puts out blog posts whenever it decides to list new assets into the Coinbase Assets Twitter account. And there are lots of people who were talking about how they found a wallet on chain that essentially front ran, how we would say it, that announcement, and basically bought up a lot of the coins that were listed on the, basically listed in the blog post before for the announcement. So you've got all these people who are like, hey, was it insider trading? Was it this? Was it that? So it's definitely suspect. Okay. However, that being said, I see a lot of people jump to conclusions, and that there are a few other logical explanations on what could happen here. Now, if this person's come out and, has gotten in trouble and we know what happened, then, you can disregard what I'm going to say here. But there's a couple possibilities here. So, one is that they obtained, they were basically able to access private information about this listing before it went public. So that happens sometimes. So don't discredit that. That means it was not good what the person did, but don't just assume it was a Coinbase insider did this. The other thing is you can look at Coinbase's addresses on the blockchain and, find new tokens that are in those addresses before you see them in the Coinbase dashboard. So somebody could have noticed that before it, listed. So that's definitely something that I see a lot of people talking about. It's more convenient to just make noise and say, oh, it's insider trading. But it could also just be somebody who is smart, because all the information's out there on the blockchain. So another, speaking of Coinbase, we did see this also that, let me just pull up my screen here. See Coinbase getting into the movie business, okay? So apparently Coinbase is producing some Bored Ape Yacht Club films, all right? So I don't know what's going to happen with this, but this was definitely something that came out but Monday, that totally piqued my interest that I hadn't seen before. Let me know what y'all think in the comment section below. Does anybody know about this? You have any more details on these films? What's it going to be about? How's Coinbase going to be involved in producing the films? Somebody says it's a film trilogy starring the ape community. Planet of the Bored Apes. I like it. This is what somebody says in the chat. Yeah, totally. So we've seen the Bored Ape Yacht Club movies. I just haven't seen Coinbase get into the movie business before. I don't know where it's going to be distributed. Is it going to be they're just going to show it online? Is it going to be a Netflix thing? How does it work? It's going to be on Amazon? Is Coinbase starting their own Netflix? I doubt that. Pay in crypto. Watch movies, get paid in crypto. The Netflix subscription that pays you. Somebody says ape owners who license their ape get 10K royalties. Is that speculation or is that part of the news? Somebody says, will ETH 2.0 be more deflationary? Some YouTubers have been saying firmly it will not be. Well, let's just do the math here, okay? We'll end on this question. So this person's asking whether ETH's going to be deflationary whenever the merge happens. So what does this mean? Well, basically, right now, whenever we send transactions on Ethereum, whenever we do anything, we're burning Ether, okay? The Ethereum cryptocurrency. So if you trade on a DEX like Uniswap, or you send an NFT around, you buy one, sell one on OpenSea, you send Ether around, you're creating a transaction and you're paying a fee. Part of your transaction fee, people have the gas fees, part of that fee gets erased from the network, gets burned, okay? Now you can actually see, but it's also, the blockchain also creates cryptocurrency, new Ether, to pay the miners right now. So whenever we go to, whenever we merge and turn on, staking, turn on proof of stake on Ethereum later this year, most likely, we're going to reduce the amount of Ether that's created by the blockchain. And so you can see, basically, we simulate the merge. If assuming that the network activity just stays the same based on, yesterday's activity, one day right here, that we would be deflationary. If you look at it on a 7-day window, all right, you can see it's still consistent. A 1-hour window, it's even more. 5-minute window, 30-day window. All right, so basically on most time frames, I mean, on all time frames, it's showing that we're going to be net deflationary. So I don't know where they're getting the math from by saying it's not. I don't know if it's just like FUD, but let's just assume that the calculator's right here. Then I don't see a good reason why ETH would not be deflationary after the merge. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps the videos out so the more people can learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you how to become a blockchain master step-by-step from start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching Dapp University.